In this present lecture, we would like to discuss about one of the important current topic, that is money laundering and terrorist financing. So, in that regard, we would like to discuss in a recent phenomena at the Financial Action Task Force Private Sector Collaborative Forum. The Governor of the Reserve Bank of India emphasized the need for a balanced approach in combating money laundering and terrorist financing. So, the Reserve Bank of India Governor suggestions would like to discuss in this current lecture, and one of these suggestions include balanced regulation. So, balanced regulation means the governor of the Reserve Bank of India emphasized the importance of regulations that effectively illicit activities without stifling legitimate investments or financial inclusion. And the second suggestion he made regarding potential of advanced technologies. So, use of artificial intelligence, machine learning, and blockchain to enhance transaction monitoring and risk assessment. And the third suggestion he made regarding public private collaboration, need for strong partnerships between government agencies and financial institutions and civil society to safeguard the financial system. So now we would like to go to money laundering. Exactly. It is the very process of making illegally acquired money appear legitimate. It generally occurs in three different stages, and one of the first stage of money laundering is placement. So it is means introducing illegal bonds into the financial system. And the second one is layering. So it means conducting multiple transactions to obscure the source. And the third stage of money laundering is integration. It means reintegrating the laundered money into the economy as seemingly legitimate wealth. And common techniques include shell companies, offshore accounts, real estate purchases, trade based laundering, and digital currency transactions. And now we would like to analyze what exactly terrorist financing means. And it means often involves relatively small but crucial amounts of money channeled for operational costs, recruitment, and propaganda in the field of terrorism activities. These funds may originate from legal sources such as donations or charities or illegal means like drug trafficking and smuggling. So, now we would like to discuss the various methods. So, the methods of terrorist financing. One is Hawala transactions. Hawala transaction means informal value transfer systems, and the second one, the NGOs fundraising. So, charitable organizations and NGOs misused for fundraising for the purpose of financing terrorist activities. Then the next important method of terrorist financing is cryptocurrencies. So cryptocurrencies and digital wallets, they are another method of terrorist financing. And the next method is fake businesses enterprises and shell companies which would otherwise finance terrorist activities. And the last important method of terrorist financing is smuggling. So, smuggling of cash and high value goods also indirectly finance terrorist activities. And now we would like to discuss regarding the challenges in combating money laundering and terrorist financing. So the first one is that we would like to discuss what are the legal and institutional frameworks that are found. So, India has several adopted several laws and enforcement measures to tackle money laundering and terrorist financing, aligned with global standards set by the Financial Action Task Force. So, one of the major legal framework or act to combat money laundering, terrorist financing is Prevention of Money Laundering Act 2002. It is India's primary anti-money laundering law. It mandates financial institutions to report suspicious transactions and empowers authorities to seize illicit assets. So, the Directorate is the primary agency enforcing Prevention of Money Laundering Act 2002 provisions. And the next important piece of legislation or legal framework to combat money laundering and terrorist financing is Unlawful Activities Prevention Act 1967. It criminalizes terrorist financing and provides strict penalties for funding or supporting extremist groups. And the next important legal framework we could say is relating to enforcement directorate, which is primary agency of the central government to enforce all illegal activities or violations falling under Prevention of Money Laundering Act 2002. And the next important one, that is the legal framework relating to Financial Intelligence Unit, and it is under the Ministry of Finance, Union Government, which collects and analyzes financial data to detect money laundering and terror financing. And the next one is regarding Reserve Bank of India guidelines. So, the Reserve Bank of India mandates Know Your Customer or KYC, anti-money laundering and counter-terrorism financing frameworks and norms for banks and financial institutions to curb illicit financial flows. And the next important act that relates to combating money laundering and terrorist financing is Foreign Contribution Regulation Act of 2010. So, the very act monitors foreign funding received by NGOs and associations, ensuring they are not used for illegal activities. So, the very purpose of this legal framework is to evolving digital payment methods like cryptocurrencies, Hawala networks that bypass formal banking channels, cross border financial flows make tracking difficult. Also, complex corporate structures used to obscure illicit funds, and finally, delay in judicial proceedings leading to slow convictions rate in this important activity, which we can not only the economic system, so also the very social and political fabric, and it is a threat not only to the security of the state of India, but also it threatens the very sovereignty and integrity of India, and it also provides a kind of impetus to the terrorist in creating law and order situation in India. So now we would like to conclude the very lecture on money laundering and terrorist financing, and these very recent developments. India has ramped up its effort to combat financial crimes, particularly in light of the Financial Action Task Force reviews and growing digital financial transactions. So the key measures it takes include crack down on shell companies to prevent money laundering, and regulation of cryptocurrency transactions, and strengthening interagency coordination between the enforcement directorate and the Financial Intelligence Unit of India, which is under the Ministry of Finance, and also the Reserve Bank of India and the intelligence agencies, in particular the NIA, National Investigating Agency, etc. So, in this lecture, we have completely in brief dealt what exactly money laundering means and how money laundering activities led to terrorist financing. And in that context, we have discussed the various suggestions made by the Governor of Reserve Bank of India, in particularly for balanced regulation, regulations then potential of advanced technologies, and also for public-private collaborations. And in that context, we have analyzed the very meaning of money laundering activities in India through placement, layering, and integration, and also we examined what exactly terrorist financing means and what are the different methods which help in terrorist financing, such as hawala transactions, charitable organizations, NGOs, fundraising for the very purpose of financing terrorist activities, and cryptocurrencies, which are also helped in terrorist financing, also fake businesses and smuggling activities, and those challenges that we face in money laundering and terrorist financing, and what are the very legal frameworks that are evolved in India in combating money laundering and terrorist financing, in particularly Prevention of Money Laundering Act 2002, the Unlawful Activities Prevention Act 1967, the Foreign Contribution Regulation Act 2010, and those agencies or institutions such as the Enforcement Directorate, the Financial Intelligence Unit of the Ministry of Finance, and in particularly the Reserve Bank of India guidelines, which are specifically made for combating money laundering and terrorist financing in India.